Hello YouTube, it's your boy the Crazy Trader, and I bring you another edition of the stock review today. And today I'm going to give you a very brief recap, not a recap, but I'll give you a very short or brief stock review. I told you I was going to bring you guys an ETF that I was going to talk about, so I'm going to go about the ETF. But anyways, IVR is not doing all that well right now, down 2.3%. That's okay. I mean, if it goes down to 3 point something again, I think I might add up to 3,000 shares. I'm supposed to end at 2,500, but it's 2,700 now because I do love the share so much. So if it keeps going, not keeps going down and down and down, because I don't want to cut a falling knife. But at 330, I think it's still a buy price. So at 330, I think I'll still buy more. Right now, it's not really moving that much, but that's fine because it's my long-term play. After that, I think I might go to MFA and then stack up a little bit on MFA. But MFA has held steady for a while now, and their dividends have also held steady for a while now. Today, I didn't do anything to my account, but as you can see, I'm up 0.49%. That's like, let's say 0.5%, 176%. When we started the day, I wasn't doing too well. It was still down, but by the end of the day, I was doing okay. So it's been a great day today, and my account is doing really well. It's still bouncing up and down because I have some cryptos in there. I have some Dogecoin, and I bought some Bitcoins on the dip, hoping that if it goes up, I might sell and reap something out of it. So I put a little bit of money, not too much, just a little. I mean, just a little start. If it dips some more, I might get some more, but for now I put a little money on there. So if you see it dipping and going up, that's my Doge and my Bitcoin playing their games. So today the ETF that I bring to you is SRET. Let's go. Global X Super Dividend Real Estate Investment Trust ETF. Let's do just a sharp or a fast recap on it, and then I'll just leave you guys to decide. I'm at the price of 9.94. Let's say $10. It's not $10 yet, but I'm just saying $10 because I think it goes up almost to 10 and then it dips down back down. So let's say $10. At a price of $10, the dividend yield is 6.72%, and the market cap is 500 million. That's the market cap. Okay. Price earning ratio 186. Don't look at that right now. Let me show you what is happening. So for the past week, 1%. Past month, 0.40%. It hasn't done too great. For the past 3 months, 6.7%. That is really decent. For the past year, 36%. Okay, that's good. This is the chart that I want to show you. Anytime I show you this chart, a lot of people think I'm trying to show a chart that is assuming that is going to go back to its all-time highs. Okay, this is not what I'm trying to show you. I'm trying to show you how stabilized this ETF is. This is how stable this ETF is. It has been stabilized by the fund managers to a point where it doesn't go down way too much. Look at this ETF, stabilized 14, 15, 14, 15. This was its biggest dip. That's 13.50. okay, that was its biggest dip. That was 2018 December. I think there was a pullback somewhere in 2018 December. So that's the biggest dip it had. $15. It's been playing $15 for the past 5 years. And then when the pandemic hit, this is the same stock hitting a $5, 5.11. I mean, imagine you cut this stock at $5.11. This is you doubling your money in less than a year already, because it's less than a year. Here it is almost double your money. Okay, so that's a good growth, and this is the kind of growth that I want to see. You can see that is leveling up day in and day out. You can see the growth going up. It's the same fund managers, it's the same fund. Nothing has changed apart from the pandemic. So definitely that this is going to gradually grow back to its old glory. So these are some of the things that I look at when I'm looking at a stock to buy. I own none of this stock. Okay, this is a disclaimer. I own none of this stock, and I'm not a professional. This is just my own opinions and my own views. So don't go out there and sue me. But this is a great ETF. If that you're looking at, it's a great ETF. It pays monthly dividends. It cut the dividends, though. I'll show you all of that because they had a dividend cut, but I'll show you all of that. Let's go to just a brief review on it, because what I showed you was on Robinhood. Okay, so what do we want to see? these are some of its top 10 holdings. Okay, these are some of the real estate. These are some of the REITs that is holding, the shares that is holding. If you know an ETF is like a basket of stocks, or a basket of ETF, whatever it is. It's like a basket of stocks. So they have different stocks in one ETF. Okay, so I think I've done a video on Two Harbor investments. Okay, I've done a video on it. So this ETF holds 3.42% of Two Harbor investment in its portfolio. Okay, and they have a lot of real estate stocks in their portfolio. These are the top 10. Iron Mounting, some of them I don't even know them, I just found them out here, but this one I am very familiar with because I think I've done a video on it. Okay, so these are some of their top 10. The Iron Mounting 4.15%. I don't want to go through all this. You can find the information online if you want. Their year to date return is 13.5%. 1 year return 51%. This is because it dipped really hard. Okay, so and the dividend is 5 cents every month. So if let's go to the quarterly. So if it's quarterly, that means it's 15 cents every quarter. Okay, that's what we are looking at, 15 cents every quarter. But if it's monthly, it's 5 cents every month. So at the price of $9, this is a big steal. Okay, and it still has the potential. It still has the big potential to grow. If you see the geographic breakdown of their net assets, of the assets that they hold, or of the stocks that they hold, 70% of their investments is in the United States, and then 11% is in Canada, and 10% is in Australia and Asia, and 5.9% is Asia developed. I think this is just Australia, and 5.9%, or let's say 6%, is Asia. So it's very diversified. They are not concentrated in one camp. It's very diversified. That's what even makes it a very good stock. So if you are looking at it, you are looking at a great ETF right now that you should have an eye off on. Okay, 5 cents dividends. It's been there for a while. They had a 10-cent dividend for a while, and then they had to cut it down from 10 to 5 because of the pandemic. I'll take you to nasdaq.com, and then I want you to read it. This is a publication that came out on May 24th, 2021. That's just like 2 days ago. Today's the 26th. So Global X Super Dividend REIT, that's SRET. That's the ticker symbol. Okay, it's the best ETF for income and growth. So this is passive income and growth. The all-time high was around $15. It's now selling around, let's say, $10. So there's still about 50% of more growth to attain. And then there's a dividend of 5 cents every month, okay, per share every month. And if you are looking at that, the more the dividend grows, or the more the stock grows, the more the dividend grows. And the more the dividend grows, the more passive income you get. So you are looking at a great stock. All right, you're looking at a great stock. I don't want to read the whole content of it. If you go to nasdaq.com, this news is under SRET ticker symbol. If you hit it, you find the news. So because there's some good information on there, but because the video is going to be short, I don't want to go into the news with too much. But these are some of the information that you want to be looking at if you are looking at the stock. Analysts predict 15% upside for the holdings of SRET, but this is way in June, so I think they would have met the 15% already. Okay. One last thing before I leave, the dividend history. I showed you the dividend already, but I'll still show you the dividend history of it, because not everybody saw what I did, and most of the times I always show the dividend history. So 6.05 dividend yield. The annual yield is 0.6. So 60 cents every year for every share that you hold of the stock. Okay, so for every share you get 60 cents every year. So they cut the dividend from, I think, 9 or 10, 10 cents per share. 10 cents per share until the pandemic hit. They cut it to 6 cents, and then 6, and then they cut it to 5, and then they've maintained the 5 all the way throughout. So hopefully, this is fingers crossed. I'm hoping that they keep the dividend at either 5, or they keep increasing it. If they increase it, this share is going to do good. And even if they don't increase it, at $10 per share 5 cents dividend per every share every month. Remember, this is monthly. Okay, this is not quarterly, this is monthly. So the quarterly is 15 shares. So this is April dividend, this is March dividend, this is February dividends, this is May dividend. So there's going to be June, July, August, all the way through December every month. So this is monthly. So it's a good return. Okay, 6% is a good return. You know, every $1,000 that you put in, I think 6% is about $60 at the end of the year. Your bank won't give you a return like this. So remember, it's a good dividend, and it's a good investment vehicle if you really want to get into it. So anyways, this is just a quick review of the stock. And like I always say, get money, don't make no money, and you always gotta risk it to get the biscuit. I'm out of your hair. Stay blessed and stay safe. Peace.